Hello and welcome to this video. In this video, we will go through the 6 key dimensions due to which I think 1 inch is an excellent project that can potentially give excellent returns in short and long term. So here are the 6 key dimensions which we will explore in this video. The dimension 1 is problem and value proposition. The second dimension is use case and economic viability of the use case. The third dimension is ecosystem and platform. The fourth dimension is the team. The fifth dimension is investors and funding. The sixth dimension is social media presence and exchanges. And in the end, we will make a price prediction based on the information presented in all these 6 dimensions. So let's go ahead and see how 1 inch can give us good returns in the short term and in the long term. So the name 1 inch is derived from the Bruce Lee's famous 1 inch punch, which was very efficient and can knock off its opponent like that. As the institutional demand is increasing for the digital assets, and we see more and more big players making digital assets or cryptocurrencies a part of their portfolio, there is need for a solution in the market to help them fulfill their big orders efficiently, meaning in shorter time and also with the best possible rates. The existing solutions don't have the ability to source liquidity by conducting an intelligent exploratory process to enable the acquisition of digital assets in shorter time and best possible rates, meaning the average cost per digital asset in that order. In this way, it is more efficient than the existing solutions such as SushiSwap and Uniswap, since they don't operate like that. For the institutional investors and big buyers, the liquidity and slippage can be an issue, and 1 inch solves this problem by intelligently exploring a number of different liquidity protocols. This is done to find the most efficient swap route for the big orders and thus executes the trades in the most efficient way possible by optimizing a number of different variables, for example, price, liquidity, and slippage. Dimension 2, use case and economic viability of use case, which is very, very important. So as mentioned before, it is geared towards the buyers who have big orders, because this is where slippage and liquidity becomes an issue and can result in the institutions paying more price for each of the digital asset in their order, or average price of the digital assets in their order increases, so they won't reduce it. This is where 1 inch really shines. This is a screenshot from one of my videos, and the link of that video will appear above. So over here we can see that the institutional demand for cryptocurrencies is huge, and Skybridge bought 122 million digital assets, One River bought 600 millions of digital assets, Guggenheim bought 530 millions worth of digital assets. Same goes for Mass Mutual, MicroStrategy. MicroStrategy is huge because they bought 1.125 billions of digital assets. And you can find the link to this video above if you want to know more about the involvement of institutions in cryptocurrencies. Therefore, looking at the institutional demand of cryptos, and we know that they have huge orders, and they need the most efficient way to find the best rates with as less slippage as possible. Therefore, it is the perfect time for a D-app like 1 inch to enter the market. I personally believe that the involvement of institutions in this space will further motivate even more institutions to acquire digital assets due to high potential gains when the entry to the market is made during the bear markets and accumulation zones, as mentioned in the Wall Street cheat sheet of a market cycle. So here is the psychology of a market cycle, and the institutions are more likely to accumulate in this zone, from starting right from panic till the disbelief. I personally believe, I could be wrong, but I think that we are at the very early stages of the bull run. And these observations, which I have, are actually mentioned very clearly in the video, the link of which is above. So, as the institutional demand grows in this and upcoming market cycles, they will definitely look for the apps and tools which will help them acquire digital assets at a lower average price per digital asset in that order. In institutions, they emphasize a lot on efficiency and are reluctant to go through each centralized or decentralized exchange, place orders, and once the orders are fulfilled, send the digital currencies to their wallet where they can accumulate the assets safely by owning the private keys. And even if they go through that hassle, the results will be suboptimal, meaning more time will be spent, and also they have to pay higher gas fee as well as price for their order. This makes 1inch a viable and useful solution to solve this problem. Therefore, as a result of using 1inch, the order is fulfilled with the minimum average price per digital asset which the entity wants to acquire. You don't need to be representing an institution or a big investor to use the Ethereum D app of 1inch. However, the use case must be elaborated to pinpoint the unique positioning of 1inch in the market as compared to other alternatives such as Uniswap, Kyber Network, Bancor, and SushiSwap. Dimension 3, ecosystem and platform. So, essentially, 1inch is an Ethereum DApp and a DEX aggregator and automated market maker. So the DEX aggregator of 1inch carries out its exploratory process by navigating over 33 different liquidity protocols, and by doing so, it finds the most efficient swap routes for the orders that will cumulatively result in the most efficient trade by optimizing the parameters such as slippage, price, and liquidity, as I mentioned before. The automated market maker of 1inch is more efficient as compared to Uniswap and SushiSwap due to its unique features that improves its efficiency over them. The founders of 1inch are Sergey Kunz and Anton Burkov, who are amazingly talented individuals. We can see these gentlemen over here. So during one live stream, Anton Burkov, 1inch future co-founder who had been introduced to Sergey by a friend, joined in. The two developers hit it off immediately, and Anton became the channel's co-host for the next 6 months. So basically, Sergey was running a YouTube channel by the name Cryptomanics, in which he did live security audits of smart contracts, and this is how they met. Subsequently, Sergey and Anton took part in a hackathon in Singapore where they won a prize. Many more hackathons and prizes followed, including 2 major awards from Ethereum Global, cementing the duo's reputation in the crypto space, and that is a big achievement. In May 2019, at a hackathon in New York City, over the course of 60 sleepless hours, Sergey and Anton developed a DEX aggregator solution from an idea that arrived when the hackathon had already been in progress. Meanwhile, in the weeks preceding the hackathon, Sergey wrote an arbitrage board, and that prompted him and Anton to the idea of a crypto exchange aggregator that splits deals across multiple exchanges, offering the user best rates than any individual exchange. And that is the exploratory process which I talked about previously. Dimension 5, investors and funding. Looking at their exceptional talent and their outstanding solution, investors like Binance Labs and Panthera Capital got interested. The first funding round of around 2.8 million US dollars came as a seed round from Binance Labs in August 2020. The second round of funding of around 12 million US dollars came from Panthera Capital in December 2020. Dimension 6. Social media presence and exchanges. 1inch is already listed on Tier 1 exchanges such as Binance and Huobi Global. Its Telegram channel has over 8,500 members, which is a great achievement for a young project. Then their Twitter account has over 60.7 thousand followers, which is again huge considering the fact that the project is relatively new. And now is the moment for which all of you must be waiting anxiously. So now we look at the price prediction of 1inch in short term 3 to 6 months and long term, that is 2 to 5 years, on the basis of the dimensions which we just discussed. So here are the key findings. Number 1, relationship with key players like Binance. Binance and Panthera Capital funded them, so they will definitely promote and help them in marketing the project. Binance acquired CoinMarketCap also, as you know, and advertising this project over there can definitely impact the price too. Also, listing the coin on Binance exchange is amazing because it will give this project great visibility. The second finding is unique use case. It is geared towards institutional investors who are already acquiring digital assets worth billions of US dollars in the cryptocurrency market to diversify their portfolio, and as a result, they want them to be a hedge against in traditional markets in the long term, which actually includes stocks, bonds, etc. Then there's social media presence and growing community. Even though the project is new, as I mentioned, it has over 60k followers on Twitter and a community of over 8,000 followers on Telegram, which is a great achievement. Then the exchanges and liquidity. So it has already been listed on Tier 1 exchanges like Huobi Global and Binance, so liquidity is not going to be a problem, and more traders are going to be attracted towards this project and would like to acquire this digital asset. And finally, the market cap of similar coins with inferior value proposition. So SushiSwap has a market cap of 923 million US dollars. Uniswap has a market cap of 2.645 billion US dollars. And 1inch market cap is currently sitting at only 135 million US dollars. So, looking at their innovative solution and looking at the market cap of their competitors who don't have such a unique value proposition and positioning in the market, and also by looking at the other key dimensions which we already discussed and the conclusions which we drew as a result, we can realistically expect a 2x to 3x increase in market cap in coming 2 to 6 months. And depending on the market sentiment and at the stage of the market cycle, if the bull run lasts longer, more institutions are expected to make digital assets a part of their portfolio. So, the use case of 1inch is going to be very attractive to the institutions, and as a result, we can expect 10x to 15x increase in the market cap conservatively in the coming 2 to 5 years. I hope that you enjoyed this video. Please subscribe to this channel. It helps my channel grow and it motivates me to do all this research so that you can have the up-to-date knowledge about this market. This information is time sensitive, so please subscribe to this channel, press the notification bell and select the all option so that you can be notified about upcoming videos like that once they come out. Thank you very much. Bye bye and have a nice day.